So this is kind of an interesting pattern. This is how the market makers work sometimes. Now it's hard, you can't tell if it was just an attack by short sellers or if it was the market makers needing inventory. But here's what happens. We see this XPER pops and it's flagging in here. And then all of a sudden it just gets whacked just when it looks like it's going to go at over 1835 here. It gets whacked and they drive it down and it trades down to 1795. And so they probably take out a bunch of stops and all that kind of stuff. And it spikes down, and then the next two candles are right back up, and then next candle trades over the breakout level, and away it goes into this uptrending channel. This is quite often what happens when market makers need inventory, when they've got a big orders that they're sitting on to buy and they can't get any. They'll attack the stock, they'll whack it down, they'll clean out, and then they'll sit down here and they'll collect all the bids that they can, and as much as they can, and then they'll run it right back up because they have all these big buy orders. And they collect and they get as much as they can. So, I mean, in here was trading, traded volume 23,000. And this one it traded 50,000 and just 17,000 on that one. Then they ran it back up, another 36,000. So they'll whack it with not too much volume, but it scares everybody. They all panic. Everybody jumps out of it. They get it. They get as much as they can, and then they start buying their orders and they take it up and away it goes. That doesn't happen all the time, but that's one of the reasons you get a move like that. The other thing is short sellers think they can whack it and sell it down, and it turns out that there's big orders hanging there, and they take it back up, and then the shorts have to get squeezed and away they go. And you see it happen again here. Straight down, pulled back up. Here, pop, straight back down, pop back up. So next time you see it pop down like that to the trend line, could be a buy.